hell is coming. Okay, and I felt, it's really, I've never had this experience before in my life. The closest I had was the financial crisis, where I'm saying, things are coming, bad stuff's coming. But this was a feeling like I've never had. Like there's a tsunami coming, right? The tsunami's coming in. You feel it in the air.
All right, that was Bill Ackman speaking with Scott Wapner on CNBC back on March 18th.
I do right now, though, want to bring in Bill Ackman on the phone. He took to Twitter today to urge the president to take more dramatic measures to stop the spread of the virus. Bill, I thank you for joining us today.
Thank you, Scott.
A number of ideas you put forth. I'm going to read one of them for our viewers to start. Mr. President, the only answer is to shut down the country for the next 30 days and close the borders, you say. Tell all Americans that you are putting us on an extended spring break at home with family, keeping only essential services open. The government pays wages until we reopen. I know from our conversation.
But now, take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties. It's down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. Park Hotels and Resorts. This, stock's down from 33 to 4. This is a spinoff from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Every one.
Hang on just 1 second. You say Hilton is going to zero? I mean...
Again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done. Okay, because no business can survive a period of 18 months.
Who is Bill Ackman? People who know about Carl Icahn or the story about Herbalife would know this gray-hair guy. He is known for betting or shorting against Herbalife, stating it as the Ponzi scheme or pyramid scheme. He went shorting his position in Herbalife and later had a war with Carl Icahn, who is also a billionaire. Later, Bill Ackman had to lose $1 billion closing his deal in 2017. There is a movie on Netflix called Betting on Zero regarding the same. Do check it out. Bill Ackman is the CEO and founder of an American hedge fund management company called Pershing Square. He had bad early years of the 2010s. As you can see in 2015 and 2016, his company was not doing well, but the stock market was going up and up. He started to recover his losses from 2017 and 2018. He finally made profit from 2018 onwards. In 2020, due to the virus crisis, the whole stock market went crumbling, while Pershing Square made a profit. As of March 2020, he has made around 37% profit from his CDS investment, that is, credit default swaps. These are similar to insurance against disasters. So, how did Bill Ackman turn $27 million into $2.6 billion? That is 100 times the invested amount within a month of investment. The answer is Bill Ackman believed in his intuition and added some more spice into the tumbling market in the month of March. He not only made $2.6 billion, but also invested a lot during the dip in March 2020. He has invested a lot in March, meaning he is sure to make good returns in the long term. So, let's get clear on how he made 100 times return in a month. What Bill Ackman did was to bet against the market. He runs a hedge fund corporation, meaning they buy lots and lots of bonds, CDOs, and CDS. That is, collateralized debt obligations and credit default swaps. I would recommend everyone to watch The Big Short movie, where Michael Burry betted against the market and he became a millionaire through the same CDS. He saw that the virus had destroyed the economy of China, or Wuhan, in the month of January, when they had imposed lockdown. The virus had started to spread across the US, and Ackman saw the price of CDS, which was trading lower than expected, at around 50 basis points. He knew that they were significantly undervalued based on the present situation and economic uncertainty. So, he started to buy them. It would cost him $27 million per month, meaning 27 million multiplied by 12 months. Which adds up to $324 million per year. Now multiply the same with 5 years, because the CDS contract is for 5 years. This adds up to $1.6 billion. He could literally have lost this, or more, if the CDS had reduced its value, but he knew that they were already undervalued, and CDS are not as risky as the stock market. Hence he was trading it much safer. You can see he started to stock up his CDS. Later, he came live on CNBC making statements to shut down the country for a month. This was more than enough, the stock market crashed even more. The value of these CDS increased to 150 basis points. This in turn made his investment 100 times more. Hence his bet on CDS did pay him. But we should also remember that his statement also made the investors and retailers panic and the stock market to crash even more. There are many investors and media agencies blaming Bill Ackman for driving the market further down due to his negative comments, but he still came as the winner. This is surely one of the best trades in history so far. 100 times returns in a single month. Thank you for watching. Please make sure to like, comment, share, and subscribe.